It's the kind of reception you might expect for the latest Apple product unveiling or fans waiting outside a rock concert. But these are scenes from the openings of the first US stores for German supermarket chain Lidl. The company plans to have 100 across the East Coast by next summer, and it's not the only European discounter with grand plans for the US market. German rival Aldi recently announced it's investing more than $3 billion to expand its store base in the US and is spending $1.6 billion remodeling its pre-existing stores.
You know, I think that the high level of experience of both of these chains and their very aggressive growth plans for the United States demonstrates and signals a lot of confidence that we'll be seeing a shift in terms of the importance of branded products at retail, as well as sort of a redefinition of what value means to the everyday supermarket consumer.
The two German discounters share similar business models. They keep prices low by limiting inventory to a lean selection of private label items. Carrying fewer items also reduces the footprint of the stores. Aldi and Lidl tend to be significantly smaller, around a quarter of the size of traditional American supermarkets, further cutting their operating costs. Lidl has pledged to sell groceries up to 50% cheaper than its competitors. But a study by Deutsche Bank found Lidl was only priced up to 10% below neighbouring Walmart stores, nearly 15% lower than Kroger, and almost the same as Aldi. But rock-bottom prices don't mean the stores are just targeting bargain hunters. According to a recent study by management consultants Bain & Company, Aldi is making inroads into new customer segments, attracting more mainstreamers and family-focused consumers. And Aldi has more of these shoppers in its sights. It's targeting upscale areas for new store locations and offering organic and premium foods. Analysts say it's a winning formula.
Their model seemed to be focused more around efficiency. In many of these cases, the crates that the food is delivered in is actually what's put up on the shelf. So that's one way that they achieve efficiency. They're also mostly private label. So in many ways, they cut out that middleman that adds cost to the structure.
According to some analysts, although Aldi only accounts for around 1.5% of the US grocery market, it's growing at 15% a year. Whereas Walmart currently controls about 22% of the market, but its US sales are estimated to only grow by around 2% this year. So these European discounters may give their US counterparts some food for thought. Jade Barker, TRT World, New York.